Hello everyone, and welcome back to our channel. In today's video, we'll be discussing the latest developments in US inflation and their implications for the economy. We have gathered information from two articles that shed light on the recent inflation data and the Federal Reserve's response. So let's dive right in. U.S. inflation numbers for June. According to the first article, the U.S. inflation rate dropped to 3% in June, which was lower than expected. This decline indicates that the Federal Reserve's interest rate increases are starting to have an impact on price pressures. It's worth noting that this is the slowest rate of inflation since March 2021. The annual increase in the Consumer Price Index slowed down from 4% in May to 3% in June. The article also highlights the influence of base effects on the annual figures. These effects occur when extremely large price rises from the previous year drop out of the calculations. Additionally, the Core Consumer Price Index, which excludes volatile food and energy costs, showed a more modest dip, slowing to an annual rate of 4.8% in June from 5.3% in May. The Federal Reserve has been closely monitoring inflation trends and has raised its benchmark interest rate to a range of 5 May 2025% from near zero at the beginning of 2022. While the headline rate of inflation has been moving closer to the Fed's 2% target, core inflation has been more persistent. This has led to expectations that the central bank will need to continue raising interest rates. In addition to inflation, the article mentions recent labor market data suggesting that the Fed's rate increases have begun to cool the economy, with job growth slowing. However, there are also continued inflationary pressures, as unemployment remains close to a multi-decade low, and wages are growing above levels consistent with the Fed's target inflation rate. The second article supports the notion that inflation is likely to ease in June, potentially reaching its slowest pace in over 2 years. Economists surveyed predict consumer prices to have risen 3.1% from a year earlier, down from 4% in May. However, even with this decrease, inflation remains above the Fed's 2% target. Fed officials have signaled their intention to raise interest rates further at their upcoming July meeting, aiming to combat stubbornly high core inflation. The focus on core inflation is driven by the belief that it is a better predictor of future inflation than the overall inflation rate. Rising car prices, strong demand for labor-intensive services, and previous surges in housing rental costs have contributed to core inflation. While the U.S. economy has shown resilience this year, inflation continues to take a toll on consumers. Rising prices for rent and gasoline have squeezed budgets for many individuals. This has led to lifestyle adjustments, such as downsizing apartments or driving longer distances for work, as highlighted by a personal story in the second article. To wrap up, U.S. inflation dropped to 3% in June, signaling the Federal Reserve's interest rate increases are having an impact. However, core inflation remains persistent, leading to expectations of further interest rate hikes. The upcoming Fed meeting in July is likely to result in an increase, reflecting their focus on cooling stubbornly high core inflation. As always, it's essential to keep an eye on inflation trends and their implications for the broader economy. That's it for today's video. If you found this information helpful, please give it a thumbs up and subscribe to our channel for more updates. Thank you for watching, and we'll see you in the next video.